Hey traders, checking into the stock market today. Gap down open, bears following through after a sideways range yesterday. Got myself in a bit of a pickle swinging LABU, but ended up break even on the day, and I'll show you how. Let's look at the charts. So backtracking a little bit to see where we stood yesterday, we had this megaphone on the 15-minute time frame for the S&P 500 futures. We traded sideways yesterday and most of after hours, and then pre-market we rolled over and fell through support. But I keep these lines up just out of curiosity, and look at how many times this previous support came into play today. Pre-market bounce rejected, a bounce right into the open, and the open itself rejected. We then got over it, and it bounced and acted as support. So I'm going to keep an eye on that line because it keeps coming into play both as support and resistance. Again, just a little visual guide. I always care more about price levels and trend. And essentially we saw a nice bounce off the low of the day, but we need an hourly trend change for the bulls to prove any kind of follow through, which means we have to hold the low of today and break the high of today for an hourly uptrend to then be confirmed. There was a decent little lower wick on today's candle, but as I mentioned in yesterday's video, I forget if it was crypto video or broader market, but for me, the fact that we broke the low of yesterday is a solid win for the bears in the short term. Not that they needed it, but it just makes the bulls a little bit more discouraged. Because again, it just gives us more and more distance. You know, from the low of today, we would need a 6% bull move to break resistance, which is obviously a lot different than if we held the low of yesterday and we only needed 4%. So the bears still have control of the trend. Our weekly lower high potentially being set, and pretty key day for a lot of tightening ranges that we've been keeping an eye on. Tomorrow, have to see some green, essentially. And we're going to look at Amazon, Google, and Tesla in just a moment, but they are the names that are in tightening two-day ranges and heading towards their key supports. NASDAQ, looks like that line did not come into play, so I get rid of it, no longer relevant to me. Hourly, same deal, have to confirm the hourly trend change to the bulls. And on the daily, long way away from the high. We pulled back 50% plus retracement. So a taller task if the bulls are going to prove anything to us. And it has to start with an hourly trend change. And then bears will be waiting. If we change the hourly trend to the bulls tomorrow and end the week with an hourly uptrend, bears will be waiting to scout a daily lower high, playing off the recent high. Because again, the size of the retracement that we've seen over the last few days, giving the bounce back. Semiconductors, so broke to a lower low under 201.06, but not much follow through. MU has earnings now. Bear reaction, trying to bounce. Too soon to say if they're going to be able to recover, but we can say it's an initial bearish reaction, and SMH is responding to that. And SMH had been a falling wedge that we were keeping an eye on with a downtrending support line. So I'll keep an eye on it. I'm not buying bounces off of this support, but again, just a visual guide for me to keep an eye on. And bears have complete control as long as 218.81 is resistance. And again, this is one of our weaker sectors recently. And if we look at SMH divided by SPY, it shows us that right now the semiconductor sector is the weakest it's been comparative to the S&P 500 in a very long time. We just hit fresh lows for at least a year and a half. So Tesla, this is the two-day range that I'm talking about. So 626 is a must hold, and we came fairly close today. We got within about 5%. But again, we need that green day tomorrow to try and shape up the higher low to remain within this tightening range. And I'm going to be looking for breaks of this tightening range. It's possible it's a boring week next week. If pretty much we can say 4 trading days next week with no trading Monday, holiday, we can say that if we do not break these tightening two-day ranges on Tesla, Google, and Amazon, then we know the broader market's not doing much next week. We're either going to break these ranges next week and see volatility, or we're going to break them first thing the following week, and they'll be real tight at that point, which is honestly what I'm hoping for. Again, not being in any of these positions, I want them to get as tight as possible to potentially play the break of this tightening range. Same thing with the hourly, though. If we're going to see any green tomorrow, we need an hourly trend change to the bulls to try and shape up another higher low. And I've been on the two-day time frame just condensing things down. The lower highs are persistent. We have a base of support. Can the bulls turn defense into offense by breaking the lower highs, or do the bulls get tired playing defense, and we roll over to a fresh low. And again, it's Tesla, Google, same deal. Google came close here. 2100 was support. We got down to 2135, so about 1.5% away. And Amazon got real close. Amazon 102 and 101 is now a quadruple bottom, and the lower highs recently, tightening range is going to break sometime in the near-term future. And we know that the importance of these stocks tells us that a break of these tightening ranges will mean an increase in volatility in the stock market. Unless it's a break with no follow through and we go right back to being range bound, I'm going to be looking for broader market volatility to pick up when these big players break these tightening ranges. Healthcare, still a potential daily bull flag. Yes, we broke the low of consolidation, but very barely. And keeping it simple, if daily EMA 12 is support, it's a potential daily bull flag for me. Same thing, we need the hourly trend change back to the bulls. But for both XLV and XBI, that bull flag is still on the table as a possibility. And that's showing us, again, relative strength, which we've known they've had relative strength for well over a week at this point. It's just continuing to show us that relative strength. XLF, tried to get a bounce going. Hourly trend change to the bulls needed if we're going to believe it. And essentially just trying to fend off the bear flag. So biotech sector. So talked about the trade yesterday that I made into the end of the day. And the plan was, if we see an hourly trend change shape up, I've got a great entry. I'm comfortable. I got some nice profit cushion. The risk was a gap down open in the broader market, which is what we saw. So for me, it's a reminder, swing trade less, day trade more. You're better at it. Granted, I'm trying to improve my swing trading game so I don't have to put in as much time on a weekly basis into markets for the next 30 years. But was fortunate enough to be able to bail on the morning position a lot better than I thought I would. Because LABU, my break even for this trade, because I sold half into the close yesterday, was 668. And pre-market, I'm thinking, oh man, I'm about to go from being up a day maker on this trade to being down a day maker. But right into that morning bounce first thing, I sold real quick, first 52 seconds, and sold it, sold it right at that break even of 668. So my account was red because of that, because again, it was lower than where we closed, but the trade itself was break even. So that was all right. But then just a little self-observation. I didn't trade much today. I had stuff that I was doing, meetings and appointments and stuff. And so I sat down into the end of the day and looked at my account and said, okay, I did a pretty good job balancing. My account is in the red by 10% of a day maker today, which is nothing. It's meaningless. But I know that I have a green streak going. I've been green, I think, 12 days in a row now. And it's just little base hits. You know, I'm getting my base hits, day maker, 2-day maker. Nothing massive on this 12-day streak. But I was recognizing that, again, it matters. It doesn't matter in any way, shape, or form to be down 10% a day maker or up 10% a day maker. It's the same thing. But my mind wanted to be green to keep that streak going. And so I recognized that and said, don't do something dumb, you dumb thought. And was able to recognize it. I still did take a trade because it was almost, I saw this QQQ move at the end of the day and I said, that's a 2-minute stair step straight off the low. Stair steps for the bears have been working really well in this market environment. And so I said, okay, am I taking this trade because I want to be green? Would I be taking this trade if it was the middle of the day and I was flat on the day? And the answer is yes, I would have. So ended up shorting the 2-minute stair step here and just a very small little win. I was out fairly quickly, half and then the other half. And that was enough to push me into the green by 10% of a day maker. So interesting self-reflection, just that little voice that can sometimes, if we don't recognize it, again, I feel FOMO. I feel these emotions that we want to distance ourselves from. It's the act of recognizing them that allows us to not succumb to those thoughts. So I had the thought, I reflected upon it, I did some psychological analysis, and then determined that the trade was still okay for me to enter. NIO, still trying for a daily higher low. Inside bar must break bull tomorrow for the inside bar to be, or for the daily higher low to be set. Baba's looking for the daily higher low. Baidu's looking for the daily higher low. So again, our stronger names, XLV, XBI, Baba, Baidu, NIO, still look okay on these daily time frames. And they're looking over their shoulder and saying, come on, S&P 500, give me some green to work with. Set some kind of daily bounce because they are positioned so much better. There's a giant snake. I got to get video of that bad boy. Couldn't find my camera. I didn't get him. It was a big 4-foot black rat snake. But he disappeared real quick, so he's got to have a hole around there. We'll get him someday. What are we talking about? So daily higher lows. There are names that are positioned well for daily higher lows, but they certainly need broader market help. 10-year, drop to the daily lower low. Weekly consolidation still continuing. A broader market bull looks at this and says, great, we got further weakness. This is what I want to see in the 10-year if I'm going to be looking for a broader market stock bounce. A bear looks at this and says, great, the 10-year is still weak and the broader market is not bouncing at all. And it's not even helping. So definitely both perspectives you can look at it, but we got a clear daily downtrend. And if we see no bear follow through here, we'll be scouting a falling wedge. We can look at it perhaps on the 12-hour time frame. Essentially, if we get a bounce going into tomorrow, that's when I start to scout a wedge. I'm giving the bears a chance to follow through on that bear break. But if the bounce gets going, I scout the wedge. As far as the dollar is concerned, double top essentially at 105.79, just under that level, but still an uptrend. I would need to see a break of these supports. And again, same thing. Both the dollar and the 10-year weak, and the markets red as well. The VIX weekly equilibrium continues to tighten. And watching for a break. Still need follow through to set the weekly higher low. We'll need that next week. But we're getting real tight there. So what's aligning? Very important individual names tightening 2-day ranges. The VIX tightening weekly range. Probably going to see everything break at once. Or at least very close to each other. So watching for that volatility. Oil, big pullback for the bears after the daily lower high is set. Now the bulls must form a daily higher low compared to 101.53. Energy sector bears following through. Looks like a daily bear flag. Have to break 69.47 to prove it. Natural gas bulls got a bounce going into the end of the day. No, they didn't. They got a dump going. Well, let's see. That was a pretty decent bounce. Obviously, the dump is much more impressive. Yeah, when you're dumping that much, this does not look like much, but that's a 5% bounce. But the top is in for natural gas. You know, we said it. Could say it more confidently every little lower low that we see. But look at this weekly time frame. We know we're scouting a weekly lower high from here. So oil bears are looking at this and saying, come on, join rolling over. But commodities are weak. We know gold and the metals are weak. They're testing our lows. We know copper has been extremely weak. And it was the energy commodities that were holding up better. But that's no longer the case for natural gas, and we'll see about oil. All right, we'll see what tomorrow brings. I hope you're well. Do good things. See you soon. So in today's trading and gardening analogy, we're going to be talking about patience and paying off time with dividends. So every single plant here started back in October as an individual clove of garlic. And in a few months from now, 9 months after planting them, they will each give me a head of garlic with an exponential gain. So when we're starting out trading, we know it's even a lot longer scope than that. And when I was first starting out, I had a mindset that was too short-sighted. You know, when I'm in year 2 of trading, I was thinking, all right, I'm looking to benefit myself with this time that I'm putting in year 2, I'm trying to see these gains in year 2 from what I'm doing here. And I didn't have the mindset of, this is going to set the stage for 7 years from now. So when 2017 crypto exploded to the upside, and I was in flow state trading it for a long time, that was my 7th year of trading, and I really started to get the feeling every single hour of work that I had put in over the last 7 years was all leading up into that one moment, and nothing else before it mattered, and this is what the stage was set for. And it even happened with me passing up certain opportunities. I watched the 3D printing sector explode to the upside, and I made very little money from it. It was a missed opportunity, but I learned and I said, okay, exponential gains, FOMO, euphoria, new technology, and I made note of that, and that definitely played a part in capitalizing on the opportunity when I saw it again with cryptocurrency.